What's going on, everybody? So in today's video, we're going to be going over how to catch stop hunts, inducements, things of that nature. So without further ado, let's go ahead and get right into it. So, like I stated before, we're going to be looking at how to catch stop hunts, inducements, things like that. As you guys can see, I'm getting right into the video, the meat of it. GBP CAD, right? As you look at GBP CAD, this pair I have already marked out correctly. And as you can see, we have a low and a high point, and we've broken out. Okay, so this, I want to mark out this beforehand so I can go ahead and show you guys this, and then I'm going to show you guys on another chart. This can go up or this can go down. Either way it goes, doesn't matter, as long as you look for these certain criteria before you enter into the trade. Okay, so criteria one, the market must have been trending up or trending down from an area after a certain point in time. So now we see right here, market been going from where? From low to high. So now it's pretty much time to switch directions at this point in time. Okay, so, and this is not a golden, it has to happen. This is just a you get a feel for the market after a certain amount of time. I've been in the market for a couple of years, so this pretty much happens a lot weekly. Okay, not weekly, but this happened with pretty much every currency pair. This happens with. Okay, so we got an up move. I wouldn't say a down move because it really didn't go too much down, but it did go down a little bit. We got an up move, a down move. Pretty much we got an uptrend, okay? Because it's not really going down any at all, really. It's just going kind of sideways-ish. It's not really down, but it's going up for sure, okay? So a good trader could have called that for about 600 pips. A 600 pip move up, okay? So it has to be going up. Criteria one has to be going up or down for a long amount of time, long period of time, okay? From that high to that low, that's 500 some pips. That's a long time. Okay, so now criteria two, we see some type of divergence. Okay, we see divergence here. Okay, we got a point here. Okay, and we got a high point here. All right, now down here we got a low point or a high point shape. Then we got a lower point. So we got some divergence right there. Okay, so that's our criteria two, divergence. Now we got both criteria met, right? The trend, right? It's been trending. Divergence, that's two. Now we need this criteria met. We need to see this trend break, right? Nothing like this, boom, and then bounce. Okay, so nothing like this. Okay, nothing like that, right? Nothing like this. Okay, no. Okay, again, get down. We not. Okay, bounce, bounce, bounce. There we go. Okay, but here, do we get a no? Get a break. There we go. We get a break. We don't get a bounce. We get a break. So we got that breakdown, right? Right here. We don't get this bounce. We get this break. So break. And now after the break of this trend, okay, we can take this eclipse right here. Boom. So now after the break of this, boom, we're looking for a boom, a break of that structure and then a move back down. Okay, let me explain to you guys why we're looking for a break up and then a break back down. Let me explain to you guys this. Okay, now I'm gonna move all this stuff out the way. Okay, cool. So this break of this structure, mind you, we're in a 4-hour chart. We're not the only ones seeing this. Okay, we're not the only trader seeing this, right? But a lot of traders like to do what? They like to do boom breakout trades. So they got their entries into there and they got entries into there. Okay, so since they got entries, something like that right there. There you go. Boom. You gotta get what I'm trying to do. So something like that right there. Okay, cool. So boom, and we got our traders taking advantage of that drop. 300 pips. That's a lot of pips, right? A lot of pips. A lot of traders going short on that trade. So net, I mean, where the stop's going to be at, right? Where the stop's going to be at. If we got traders entering into this breakout trade, where the stop's going to be at. Okay, so let's be smart about it. Be smart about it. Let's make this like a blue for so that we know this is the stops. Okay. Let's be smart about it. Okay. Boom. Something like that right there. Boom. We got stop right there. And we got some, if I can grab it. We got some right. Cool. So we got stops up there, and then we got stops right there. Those are what those that's what a stops is right there. That's what a stops is. Now, if you got stops up in there, and you got most stops up in there, right there, like that, more than likely, what the market gonna do is gonna come and try to find liquidity, right? So this is where it's gonna come and find the liquidity up there. Boom, boom, boom. It's gonna come and try to find that liquidity. Okay, we got stops up in there. Boom, we need that. Okay, we got stops up in there. Okay, boom, we need that. Okay, we need that to finish this move down. Okay, to finish this. This is not even a stop hunt move. This is just how the market works. All right. So once we understand that the market hunts for liquidity, and if you're in that pool of liquidity, you will be hunted. It's not hunting you necessarily. It's just you so happen to be in the wrong place at the wrong time. That's it. And it's hunting those areas of liquidity because a lot of traders just get into those areas right there. Okay. Boom. That's as simple as that. Okay. And it goes the same way, up or down. Now, this was a look. This was a look at going down. Okay. Now, this is GBP CAD. So this is what I'm looking for. Looking for it to go up here, and I'm looking for it to come back down there. So this is me. Boom. Looking for that. So now let's look at a different one. Let's do well, I had dollar Swiss as well. Let's look at dollar Swissy. Okay. Dollar Swissy. Yeah, we got some type of evidence right there. Okay, cool. So here's dollar Swissy. Now at the same time, what's been going on? Here's a high point and here's a low point. How many pips is that from that high to that low? About 400 pips. About 400 pips. I would like to see it a little more, but you know, let's see if we can work with this right here. Like I said, this is not an end all be all strategy, but this works a lot of the time. Okay, it works a lot of time. Now, if you just wait for these type of setups, you will be so proud. I guarantee you. Now, we're gonna wait for that hype there. We ain't gonna wait for it, but we're gonna mark up that high point. Boom, and we're gonna mark up the low point. Now, I'm showing y'all guys how to do it from scratch, from fresh off the bat. We all pull up a fresh chart, showing y'all guys how to do it. Okay, you want to mark up the high, the low, or if it down, up, mark the low, the high. Okay, so you want to see some type of break in structure. Oh, look at that. We got a little break in structure right there. Right here. See that? Let's make that black because we had the stops as blue. Boom. Okay. We got a little break in structure. Okay, cool. So criteria what? One, trending downwards. Boom, boom, boom. Okay, let's mark it up for you guys. Trending down, down, up, down, up. So high, low, high, low, high, low. Okay. We've been what? Criteria one. What? Downtrend. Boom. Okay. Criteria two. What? We see any more bounces? No, we see a break. There we go. It lagged for some reason. Give me 1 second. It is lagging. There we go. All right, cool. So criteria one, downtrend. Boom, boom, boom. Criteria two, break of the trend. Two, boom. So now what are we looking for? Okay, cool. As we come up here, how many pips did this go up? About 200 pips, right? A lot of traders are in there. All right, what we got stops at? We got stops up in there. Boom. Okay. You don't have to make this blue, but I'm gonna make it blue because I just, for the sake of the video. Boom. And then we got some more stops down there. Boom. So no matter what, you never want to just be a breakout trader. No matter what. No matter what. No matter what. This right here is not this right here is not a sufficient retest. This is not a sufficient retest. Okay. So we want to wait for the market to come down and take out stops, right? Noticeably take out stops. We want this to be noticeable, right? We want the stop taking process to be extreme, okay? To be noticeable, okay? We forgot to point out divergence. Boom, okay? Very important clue. Lower low, higher low, okay? Cool. So we need all of these to line up before we can place this trade. Okay, for it to be a sufficient trade in our favor. Okay, yeah, that's all we're doing. We're stacking the odds in our favor. Boom, and then we can go for this long. Okay, we don't want to be the people who are in this now for no reason. Right? They just in it for no reason because they don't really know the proper way the market functions, I assume. So, right, criteria one. Been trending down or up for a long period of time. In this case, it's been trending down. Down, boom, boom, boom. Criteria two, trend has been broken. Boom. Okay. Wait. Let me restart. Criteria one, it's been trending down. Criteria two, divergence. Criteria two. Criteria three, now, excuse me, my bad. We break out. Okay, we have to see that breakout. That is three. We're not trading yet, although you can trade this move from the low to the high, but you just need to know that it's not going to last up until this high point. It's just not going to do so. You need to just, if you can't, just take a little bit of change right here, just wait it out, right? Just be a little patient, wait for the market to come back down here. Boom, take out these stops. Noticeably, take out the stops. And if it reverses here and lands back above it, is the only time we would take a trade back into the opposite direction because now we know that the stops have been taken because everything else is lined up. Criteria one, downtrend. Criteria two, divergence. Criteria three, a break of structure. Boom. Criteria four, pullback, huge stop take, huge liquidity run. Okay, we're running for liquidity. Criteria five, a reversal at the point back into structure. And then we can place a trade here, okay, and put our stops here. Now, if you cannot put your stop here, your trade is too big. That's it. You're not doing the wrong kind of. Your trade is too big. Lower your lot size a little bit, and within the next couple of weeks, you'll be able to trade at that lot size comfortably. Just lower your lot size a little bit. Have a little bit more patience with yourself. Let your account grow a little more so you can be comfortable with placing trades at the proper size with the risk management properly set so that you can stand to take losses if they do occur, because they will occur. Strategy is 100% proof. Just know that. Know that. Okay. So that's how you would catch it going up. I showed you guys how you would catch it going up. Okay. This is how you would catch it going down. Okay. The premise is the exact same. Okay, guys. Premise is the exact same. Been trending up. Boom. Divergence. Boom. Breakout. Boom. Wait for that retest, the liquidity run, the stop run, boom. Okay, now we are waiting for this reversal point here. Okay, boom, reversal point, and we would enter here, okay, or here, okay, or if you want to be a little extra conservative, Mr. Rogers neighborhood trading type, you could enter there with a boom and a retest but it may not retest. So you got 1, 2 shots, and maybe possibly 3 shots to enter there. So if you enter here or here, your stop would go there. Okay. If you enter here, your stop would go here. Okay. Very simple. Very simple. And that's it. And your take profit would be at this point of where all the commotion started. Okay. Boom. It would be where all this commotion started, right here. This big, huge amount of value got inserted into the market right there and then look back. That's would be your take profit. Okay, now that's how you would catch trades to where you could place the trades and go out and do stuff. Go out for the day, 2 days, 3 days. Go out, chill. Go on vacation, chill. You don't have to be sitting here glued in front of the computer, watching it, trying to what did I call that? Scalp for what? You don't need to do that when you can just go this way and you can look. How long would it take you to get 700 pips? This is 700 micro pips. Standard lots 6,000. How long would it take you to get 600 pips scalping? Probably a hell of a long time, because all you're going for is what? 10 to 50 pips or something like that. Not even 50 pips. This is the proper way to trade. This is how the market moves. I may not, like I said, come up there. It may just keep going down there. Hey, if it does, it does. Whatever the case may be. But I'm looking forward to come and take stops. If it does not take stops, I'm never trading. And that's how you preserve your capital. It's about capital preservation, not who can trade the most and then show it off. Okay? Nah. Okay? This is how professionals trade. If you've never seen this way of trading, unlearn what you've learned because it's bullshit, it's crap, it's not gonna work long term. Trust me. Trust me. Again, Goddesses, this is your boy Ro coming at you with another video. Hey, stay tuned for the next one. Like, comment, subscribe. See y'all later.